Today, we delve into the most significant global news stories shaping our world. From economic shifts to policy changes, today's countdown will cover events that matter. Stay tuned for a major corporate IPO, a troubling inflation report, and a significant workforce reduction in tech. Here are today's top 10 stories you need to know. Market participants are considering the implications for future growth in the sector. The success of this offering could signal investor confidence in India's manufacturing sector, particularly in textiles. International Business Machines Corporation, or IBM, was upgraded to Overweight from neutral by JPMorgan today. This upgrade reflects the firm's growing confidence in IBM's software division, which is expected to accelerate in the second half of 2026. The target price for IBM shares has been raised to $291, up from $270. Analysts believe that the company is poised for substantial growth, driven by innovations in artificial intelligence and cloud computing. This upgrade comes at a time when the tech industry is in a state of flux, with many companies adapting to rapid technological changes. IBM's strategic focus on AI integration is seen as a key factor in its potential resurgence. Investors are hopeful that this positive outlook will translate into improved financial performance as the year progresses. The market reaction to this news has been cautiously optimistic, with shares showing early signs of recovery. As IBM continues to innovate, its trajectory in the tech sector will be closely monitored. Stakeholders will be watching closely to see how these results influence its strategic direction. The United States is grappling with rising inflation rates, as key economic indicators suggest an increase that could impact monetary policy. Recent data shows that annual inflation reached 4.1% in May, the highest level seen in nearly 3 years. This surge has put pressure on the Federal Reserve to consider interest rate hikes in the near future. Analysts are closely monitoring these developments, as they could significantly affect economic growth and consumer spending. The Federal Reserve's preferred inflation measure, the Core Personal Consumption Expenditures Price Index, has also shown troubling signs, indicating that inflation is not transitory. As inflation pressures mount, discussions around rate adjustments are intensifying among policymakers. Investors are reacting to these signals with caution, as they assess the potential repercussions for various sectors of the economy. The central bank's next moves will be critical in shaping the financial landscape moving forward. As debates continue, focus will remain on how these inflation trends evolve in the coming months. With inflation rates hitting new highs, the Federal Reserve is under increasing pressure to adjust interest rates. Following a recent meeting, Federal Reserve Chairman Kevin Warsh is navigating a challenging landscape as inflation data continues to worsen. The president has expressed a preference for rate cuts to stimulate economic growth, leading to a complex interplay between government and central banking policies. As inflation rises, the Fed's dual mandate of fostering maximum employment while stabilizing prices is being tested. Financial markets are responding to these signals with volatility as investors speculate on the central bank's next steps. The upcoming meetings will be crucial as policymakers weigh the economic data against the need for potential adjustments. The impact of these decisions will be felt across the economy, influencing everything from mortgage rates to consumer spending. As the Fed prepares for its next move, all eyes will be on how it balances these competing priorities. Oracle Corporation, a major player in the tech industry, announced a significant workforce reduction today, cutting approximately 21,000 jobs. This decision is part of a strategic realignment aimed at enhancing its focus on artificial intelligence and cloud computing. The tech sector has been undergoing a transformative phase, with many companies reassessing their workforce needs due to economic pressures and shifting market demands. Analysts suggest that these layoffs will enable Oracle to streamline operations, reduce costs, and redirect resources toward innovation and development in AI technologies. However, the immediate impact of these job cuts will be felt acutely by thousands of affected employees and their families, as well as the local economies that depend on their spending. Additionally, there are concerns regarding employee morale and how this will affect productivity in the long run. As Oracle navigates this transition, it will be crucial to observe how these changes influence its competitive positioning in the tech landscape. The company aims to leverage AI advancements to drive future growth and maintain its industry leadership. The stock market today is experiencing significant fluctuations as investors react to recent economic news, particularly concerning inflation and interest rates. Major indices, including the S&P 500 and NASDAQ, are showing signs of volatility as traders digest the implications of rising inflation rates that have exceeded expectations. The potential for interest rate hikes by the Federal Reserve is creating uncertainty in the markets, prompting discussions about the future of borrowing costs. Analysts are closely observing how different sectors are responding to these economic signals, with technology and consumer goods facing particular scrutiny. The market's reaction underscores the interconnectedness of economic indicators and investor sentiment, as rising costs can diminish consumer spending. As companies report their earnings, the focus will remain on how these economic conditions affect their performance and growth forecasts. Traders are bracing for potential shifts in market dynamics as the Fed's decisions approach. In the coming weeks, investors should pay close attention to inflation trends, as they will significantly influence market stability and sector performance. As countries around the world continue to grapple with rising inflation rates, global economic challenges are becoming increasingly apparent. Factors contributing to this inflation include supply chain disruptions, increased energy costs, and lingering effects from the COVID-19 pandemic. Many nations are experiencing similar pressures, which could lead to coordinated economic responses. Policymakers are faced with the difficult task of balancing economic growth with the urgent need to control inflation. This situation is prompting discussions on international cooperation and economic strategies as countries seek to stabilize their economies. The interconnectedness of global markets means that economic decisions in one nation can have far-reaching effects elsewhere, potentially exacerbating inflationary trends across borders. Analysts are closely monitoring these developments, particularly as central banks consider their own monetary policies, which may include interest rate hikes. The potential for a global economic slowdown is a significant concern, with implications for trade, investment, and employment worldwide. As nations collaborate to address these challenges, the effectiveness of their strategies will be crucial in shaping the economic landscape. Looking ahead, proactive measures and timely interventions will be essential to foster resilience and sustainable growth in the coming years. Investors will be particularly focused on any signals regarding interest rate adjustments and their implications for economic stability moving forward. In response to rising inflation pressures, the Federal Reserve is preparing for potential interest rate hikes that could reshape the economic landscape in the coming months. Recent data indicates that inflation has reached alarming levels, with year-over-year increases in consumer prices hitting the highest rates seen in decades. This surge in inflation, driven by factors such as supply chain disruptions and increased consumer demand post-pandemic, has prompted discussions among policymakers about how to address these challenges effectively. The Fed's preferred inflation measure has shown a consistent upward trend, raising concerns among financial analysts and investors alike. As inflation remains well above the central bank's target of 2%, the urgency for action is mounting. This situation has created a complex environment for the Fed, balancing the need to control inflation with the desire to support economic growth. The upcoming meetings will be pivotal as officials assess the economic data and determine the appropriate course of action. Financial markets are already reacting to these signals, with increased volatility observed across various sectors, particularly in technology and consumer goods. As the Fed navigates these turbulent waters, its decisions will have far-reaching implications for consumers, businesses, and the overall economy. Investors will be closely monitoring the Fed's next moves, particularly as they signal their commitment to combating inflation in the months ahead. Thank you for watching. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.